Hi, this is Sean Hyman from MyWealth.com, and I just want to talk to you today about something that's brewing. Actually, a couple of stories here that have unfolded recently, and it has to do with China. Anytime there's a huge story going on with China, or China's doing something huge, they're just growing at such a fast pace, and you're looking at 1.3 billion people growing in this economy, and it's always a huge deal. And so I want to talk to you about two stories that are unfolding today that I believe will help the Australian dollar and the Canadian dollars. So let's go ahead and get started.
Be sure to check out the written blog at www.mywealth.com/blog. I want to talk to you today about how China is helping the Aussie and Canadian dollars. That's AUD and CAD. Just when the U.S. and Europe can't seem to give cars away, China has a backlog of orders. Now, they have a 3-week to 2-month waiting list for the hottest cars in China, such as Hyundai's Elantra and Honda's CR-V. Too bad it's not GM and Ford and Chrysler, huh? Why the sudden surge? It's simple. It's a combination of a few things. Tax cuts, an economic rebound, and subsidies. Oh, the industry had expected a pickup in demand to the tune of about 5%, which would have been respectable. But however, what they got was an increase of 14%, almost triple the expected demand. Hot demand for cars in a highly populated place like China, 1.3 billion population, will ensure more oil and gasoline demand, which means higher prices in the future, not just in China but everywhere around the world. So how does this play into currencies? The demand from China will help the oil exporters such as Canada, and thus helps its dollar because they're pumping it out of the ground and out of these oil sands for somewhat of a fixed price, but the higher price that it can fetch widens their profits margins all the more and helps Canada's economy and thus helps their dollar. And we can readily see this from the USD/CAD chart below, dollar CAD. It had been in an uptrend, meaning that the dollar had the advantage over the Canadian dollar for quite some time. But recently, what have we seen in the last few months? The dollar has started to plummet against the Canadian dollar as oil has started to rise once again. Not only that, it's plummeted very far, but it's even recently, very recently in the last month, broken a major long-term downtrend line as well. And you can see where I've got the arrow pointed to show that I believe that it will head lower long-term. Again, this is a long-term fundamental dynamic of demand that's being put on by China. This will not turn around in a day or even a year likely. This will likely be demand as China picks up its growth amongst its billion-plus people that will really help to fuel this trend for quite some time. At the same time, yet there's another story unfolding that will aid yet another currency. Formerly, China had been in talks with Rio Tinto to buy some stakes in that company to ensure that they had ample iron ore supplies to expand their rapidly growing economy. However, that recently fell through. Whoops. So what are the plans now? Here's the plan B. They have announced plans to speed up their investments into iron ore projects in Australia because they've got to have a way to ensure these supplies to expand their economy at the rapid pace that they desire. China has already forged successful relationships with some of Australia's junior miners, so to further these relationships into Australia's larger miners really should probably be no problem. They also have the type of iron ore that China really highly regards and desires, so that's a plus as well. So how much were we talking about here? Well, they plan to spend about $500 billion over the next 8 years, so that's no small sum. This is huge. And we can see this reflected upon the Aussie/USD chart, AUD/USD. Again, it's kind of like the CAD picture for the last several months. Man, there's been a huge pickup in demand as the prices of many commodities have soared based upon demand from China and India and other places. Gold, copper, iron ore, lots of things that Australia exports to around the world that these fastly growing nations need. And so again, this is another huge fundamental dynamic that will be enforced for quite some time. And I like stories like that that aren't going to end tomorrow, but that really have some continuity and have some support for the currency pair for a long time to come. This doesn't mean every day these currencies are going up. There will be pullbacks along the way, and that's why you want to look for technical entries near uptrend lines on the Aussie dollar and the red downtrend lines on the dollar Canadian. So the bottom line, based off of these long-term fundamental forces that will benefit the Canadian and Australian dollars, look for technical entries into USD CAD short and to buy Aussie dollar, for they will benefit from the story for a long time to come as long as the demand from China persists. So you say, well, I need to find out more about the currency market, and how can I get involved in that, and how can I learn a lot of these dynamics and technical entries and signals and that sort. You can actually take one of our currency courses. You can go to mywealth.com, click on the courses tab that you see circled there, and take one of our currency courses. You can also, if you have more questions, you can feel free to call us at 866-257-9677. It's 866-257-9677. Or you can also email us at sales@mywealth.com. Be happy to discuss this more with you, whether through email or phone, or even the chat feature. You can click on the chat box as well on our blog and chat with us in real time also. Whatever you do, don't wait. Get in a course and get educated today at www.mywealth.com.
I hope you enjoyed that today. I just love it when big macro stories unfold, especially when it happens to do with large expanding economies like China. This thing with the Canadian dollar and the auto industry and the boom there that they're having when the rest of the world's not having one just yet, and the rise in oil that we're seeing just is astronomical, going from 33 all the way up to 71 as of this morning. This is going to lead to higher oil, higher gas prices in the future, no matter whether we get a near-term pullback or not. And this will help the Canadian dollar. They pull it out of the ground for a certain amount, but then they get to reap these huge profits as the price increases, expands their profit margin. So again, this is a longer-term play that can be acted upon in the short term, medium term, and all along the way when you see the good technical setups on the charts. And I also love the other story about how the deal with China and Australia is unfolding with the iron ore. I mean, in the last couple of years, I have seen China, maybe a few years, go from the 10th largest economy in the world to 8th to 6th to 4th. Now they're arguably the 3rd. I mean, these guys are expanding at a rapid pace, over 1 billion in population, and growing at a breakneck speed. And so they're not going to be having this need subside for their iron ore anytime soon. So again, we're talking about a long-term fundamental dynamic here that's going to help the Aussie dollar, and you can see it on its chart. Now, every single day, it doesn't mean that it goes up, but look for these good technical entries because you have a great fundamental support and reason why the Aussie dollar should go up. Hope you enjoyed that today. If you need to find out more about us, about our courses, go to mywealth.com. Click on the courses tab and enroll in a course today. We hope to see you there and answer all of your questions. Thanks so much for attending. Bye-bye.